up, guys? Alright. I was just picking a winner for the last prize there. Alright, cool. How's it going? It's been a while. Last week I was super sick, so I couldn't do a live. I'm super sorry for all the people that were wanting me to do a live, and I couldn't. It's kind of a bummer. But I'm a lot better now. Alex with Crypto, how's it going, man? Our gang here. Yeah, we're in a pretty big moment right now for Bitcoin. It's in a kind of a huge continuation posture location, or just another crash. And there's more confluences for a drop than there is for the short, like for the pump. But we definitely don't want to ignore the fact that if we end up seeing Bitcoin break above the 50 and the 200 EMA here, and we see it come up, act as support, we'd have a confluence where that break of structure continuation could initiate a break of a macro downtrending resistance that's been holding down the price since the all-time high. So if I go over the daily here, you can see that we're wedging right now. We got this downtrending momentum that's been holding us down, like I said, since the all-time high, and we're having a moment where we could end up getting that correction on. Like, if you look at the 4-hour time frame, we can see we're building like a larger, like double top posture against the confluence of the downtrending momentum and against the confluence of the 200 and the 50 EMA, and a loss of momentum. There's just a lot more is technically screaming to the downside, but we can't ignore the fact that there is over $6 billion worth of liquidity right at 95K that could be taken. So if we end up breaking this, that would be my target. If we break this, get that break structure continuation, I would start targeting 95K, while being very mindful of the fact that we have liquidity resting at 88.9, where that could be used as a form of exit liquidity that could also deter the price to come back down. So I'll be watching here just to see what kind of posture we build around 88.9K. However, if we manage to get the continuations past this, our next stop that I'll be looking at is between like 92 and 95K. Audio is low. Okay, I will turn it up just a little bit. How's that? Is that better? You sound so far away. Yeah. How's that, guys? Is that better? Check, check. The latency isn't fun either, so by the time you find out, let me know, guys. Your audio is very weird. Okay. Okay, well, that would be too loud now. Here, it just sounds different. You sound like you're getting picked up by a different mic. That might be it. Let me see. Okay, I'm gonna go and I'm gonna check out the properties right now. Settings, sure, device. Check, check. Now that should be better. All right. You are using the computer mic, caps lock. Okay. Well, I just made the adjustment there now. It should work a lot better. There, okay. We got the caps screaming yes. All right, sorry about that, guys. Sometimes when you go on to OBS, it just resets stuff without any warning at all. So I'm sure, like, you know, Alex with Crypto's in the house. He understands. As soon as you like get on, you did literally no tests, no changes, nothing, and then all of a sudden all your settings are like thrown through a blender, and you gotta like redo everything. It's a big pain in the butt. Okay. All right, so I'll just start over as if you guys didn't hear me. So we basically, right now we have a lot of bearish forms of confluence. We have the confluence of the downtrending momentum on the daily and the 4 hour here that I got marked on this green downtrend line. And we have an apex point between the pace of the sellers right here. And we have the apex point between that and the pace of the buyers right here. And this apex point meets in roughly around 40 days, right? By the time we get to the point where we're going to have a squeeze impact, where we're going to have to make a huge critical decision in the market. We have lots of like liquidity here, but we've taken more liquidity than we've added on the bottom side. So all the liquidity there right now, if you're thinking like a market maker, where the money all is right now is above us. We got stacked liquidity from here, from these two test points, and we got about $6 billion right here, and we got liquidity stacked here, all the way up to the all-time high pretty much. So if we end up getting this double top confirm, we just end up adding more, but we would have at least a ETA of when we should be getting a breakout. And based on the bias of where the liquidity is mostly resting, we should be having this macro break. The macro break should happen to the upside statistically, right? And if we instead confirm this large double top and break this low and get acceptance into this valley area here, then basically we'd have quite a bit of confluence as well for the short when that confirmation comes. We just need to have a break of structure showing us using the local valley area as resistance, or break of structure showing us using the neckline as a form of resistance. And that would at least give us a rotation down to 81.7. However, I think we're more likely to have our drop bring us all the way down to around 79,000. And then from there, we might see reversals that bring us to test this downtrend momentum again. So I've got my bear goggles on, but if we instead end up breaking above this downtrending momentum, above the 50 EMA and the 200 EMA, and we use this local range as support off the valley area high, that break of structure would confirm a break of all those forms of confluences and likely give us a golden cross again from the 200 going over the 50 and drive the price up to my target of 95K. So that's kind of what I'm looking at right now in terms of like the local price action. I'm kind of preparing for the worst case scenario and the best case scenario. Like I prefer a short just because of all the confluence backing behind everything. But if we long, then we can be prepared for that as well. But this is what I mean here. This is the valley area high that is kind of almost flush with the active valley area low. If we come down, use this as a form of resistance, get that break of structure, we would have the acceptance, like proper acceptance in this valley area. Like here, it wasn't proper acceptance because we got down below it, but we never got the break of structure, the pullback, proper pullback, and a lower low creation. We need to have a pullback and a break of structure within the valley area so we can confirm acceptance and then see it come down to the valley area low from there. You want to drop so bad, but I think it'll pump. I hear you. Yeah, so we're in a make it or break it moment, so we just got to see what comes first, right? If A happens, we do A, right? If B happens, we do B. So we're just waiting for it to make its decision. And if you want to try to front run it through maybe a potential SFP from up here for a short, or if we come back down, potential SFP here, or maybe we can get a lower time frame change of character occurrence off this local swing high to this local swing low. Right now we're inside of the golden pocket 786 zone right here. We can prepare for potential shorts. Just need to have that lower time frame change of character occurrence. I'd recommend like the 5 minute or the 3 minute. So if we end up getting a change of character occurrence here, you might be able to get a front run for a short. We're just going to wait for the structure first. That's pretty much it for Bitcoin. So we got lots of time to look at other assets. I got about 40 more minutes. So if you guys want to take a look, we can look at other assets that you're looking at, prepare for any potential confluence that are happening with those assets, and use what we know about Bitcoin and what we're planning for Bitcoin alongside what we could do with potentially with an altcoin. Gray wants to look at XRP. Yeah, let's look at XRP. So let's zoom out on the hourly. XRP got a little bit below my demand zone here. And double bottomed. And right now, we got the pace of the sellers are definitely shifted. Got this double bottom structure. We reclaimed above the demand zone with this break of structure, continuation. That could have been a really good potential long. But right now it's trying to get back above this valley area low. And once we get that proper acceptance into the valley area with the break of structure, the higher high, then we can extend this valley area pole to our current price action. But we're not there just yet. We finally just got the proper pullback it needed. Now we just need that higher high for that confirmation of acceptance in the value area. It's local price action. It's looking a lot like Bitcoin's. Zoom in the 15-minute now. So here we could see if we get the same kind of behavior on XRP. So we got a wick here. We didn't capture the highs of this wick here. So that means there's still liquidity above this wick that was not taken when we came up through here. We did do a local SFP, grabbing this liquidity from above this high. And then when we came down, we grabbed it all, and then we had the SFP candle close here for our short, and you would target here. And then it went a little bit beyond that to the valley area low. So right now, I would be preparing for shorts again on XRP and see if we get another local SFP. So I would be marking this local high with a get your magnet tool on, and then use a horizontal ray to mark your highs. So this is where I prepare. You can also mark this high if you like to, in case we go a little bit beyond that and we want to see if this liquidity above this wick was taken yet. But yeah, this would be a good potential SFP zone. You just need to make sure that when the candle comes up and grabs that liquidity, that the same candle that grabs liquidity closes back inside whatever active range we've got. Right now, that is right here. But we might have something a little bit higher if we get some more price action in before we scoop up that liquidity. And even better if that SFP candle closes back inside the valley area, and like below the local valley area high. And so if we get that, then you'd have the confluence of acceptance into the valley area from the SFP, and then we can start targeting the valley area low while being mindful of the POC. That's what I see locally, at least. If we instead get higher highs on XRP, then we can confirm acceptance into the macro valley area that we're looking at. And that would likely come in confluence with Bitcoin using this 50 EMA and the downtrending momentum as a form of support. If we get that break of structure continuation right here on Bitcoin, then XRP is very likely going to get that higher high, right? And then confirm acceptance into this valley area. and it could potentially run up all the way to its point of control at 241, while Bitcoin runs up towards its highs around 92 to 95K. Lots of background noise. Yeah, I might have the mic a little too powerful. I got my heater on in here. That should really turn off. It's t-shirt weather now in Canada, so 100 likes. Jeepers. Thanks, guys. What's... Sounds like your mic is still active as well. Oh, yeah. I already read that. Yeah, sorry about the background noise. I'll get this setup back running the way it's supposed to. All right, so we looked at XRP. The next request was Cubic. Let's see what we got for Cubic. We have a Cubic chart after being asked at least every single live. To take a peek at this thing. Let's go to the 4 hour. So Cubic broke downtrending momentum. The downtrending momentum that's been holding it up since its local high here. And we're trying to get... Oh, look, we're potentially building a massive double bottom posture. And we kind of want to see if we get a rejection off of this valley area low again, like we did last time, and it's been holding it up, the price action, for quite a while, right? If we get a rejection off that, we want to at least see it retest the neckline of that massive double bottom, right? Right here. If we retest it and then get a higher high, then that can help us confirm acceptance into this macro valley area and drive the price way up. We have to be mindful of like the supply concerns, of course, along the way up around 18681 right here, or this little box zone that I've got here. And it looks like it'll come in confluence with the 200 EMA. So if you watch the 200 EMA, you would be watching the same supply risk pretty much at the same time by the time price action gets up there. So this is the larger time frame right now we're looking at. We're looking at the 4 hour. But yeah, it looks like we're doing extremely well right now for Cubic. We broke the horizontal resistance here. We grabbed a bunch of liquidity before we ran up, which is great. So that liquidity is not much of a threat in the future. And it's kind of like going to make it a breaking moment, just like XRP and Bitcoin is, right? Bitcoin, if we get that higher high confirmation, it'll be running, right? If Cubic, it already got the pullback it needs, right, to help confirm the momentum as support and the local high for the continuation. But it's currently at a valley area high. Like this previous valley area high right here is what we're combating as a form of resistance. So if we just mark all this levels here, let's mark this point of control here, right? And this valley area low here. And you can see how we behaved after breaking past this downtrending momentum. We came up, got smacked down from the valley area high, right? And we pulled back to the point of control, the previous POC. And now we're trying to get that continuation with a higher high to confirm this momentum as support and also drive the price up with this macro double bottom. If we fail, it'll likely come in confluence with Bitcoin failing and giving us this double top. And the Cubic will give us as well likely a decent double top, but I see reasoning for it to kind of halt around the valley area low. And we got the momentum where the buyers could shift, or the sellers have shifted into buyers, right? And we've got the local valley area low and this little wick here where liquidity is likely resting right below that we used to induce the price to come back up and likely become range bound inside this valley area for a little bit. And then that range bound activity can help decide if we're going to build structure that would likely give us an apex point for a continuation or for a reversal right back down. So a lot is kind of riding on for XRPs and Cubic's continuation based on what Bitcoin's going to decide to do, because it's kind of the boss right now. And Its dominance is getting stronger and stronger. Everything else is kind of failing. If we look at the others dominance chart, it is in a huge critical moment right now. If we zoom out, let's go to like the 4 hour. Actually, let's go to the daily. And we zoom out on the others dominance. The others dominance chart is a great chart for anyone who's new to trading. This chart will help guide you into knowing when an altcoin season is likely going to occur. And our confirmation level for a rally, not a season, but a rally, right now is at 8.86. However, if we grab this low right here, and then we get a higher high, that level will be lower. We'll be able to use this level right here as our confirmation for a potential rally, because we would break downtrending momentum. We get that change of character occurrence, which means most assets that are part of the others dominance chart would look like this and also have a critical change of character occurrence that would help drive price up, at least to the big area of interest for me is between the 9.21% level and the 10% level, like right here where the supply concern is. There's a large amount of points of interest here that suggests that we could get a reversal, or at least a short-term reversal, and kind of end the rally. A true season where things get wild would happen right now above this key level around 12%. So this would be the potential front run to an actual season. So we can have a strong rally up, and then you start seeing things at crazy all-time highs if we get above like 12.17%. But everyone's risk off right now because of the tariffs. And until we have clarity on the tariffs, we will not have clarity on the chart. So we'll start seeing the price action just constantly be wonky all over the place. The DXY is getting a massive hit. So there's not very much confidence in the US dollar right now either. So until we have all this clarity and like come into place, I think that the market's going to be a little bit pretty volatile until we start getting some clarity. And once that clarity usually comes in, like the on-chain analytics suggest that we're going to have a massive move to the upside. So I'm kind of like banking on or waiting on the confirmation so we can take action on a really good long position. Am I still quiet? You got to represent. Thanks, man. Let's see. I'm going to turn up the mic a little bit more. Okay. So we looked at Cubic, we looked at XRP, we looked at, let's look at Chainlink. Noah wants us to look at Chainlink, so let's take a peek at that. I'm going to switch my DXY chart back to Bitcoin. Right, there we go. I gotta turn it. I can't. All I can hear is myself breathe. The slider that I use on the Shure mic that I have, it's like a touchscreen slider, so it's really tough to like control. Okay, so Link was the next one. Let's take a peek at that. Link has a lot of pairing liquidity with Bitcoin, meaning like if you guys don't know what pairing liquidity is, it's like the form of liquidity that allows people to swap between Chainlink and Bitcoin. So you need to have a reserve of Bitcoin, a part of your asset, to allow people to swap between that pool. And because of that, that means the valuation of Chainlink is tightly wound to Bitcoin's valuation. So if Bitcoin goes up, Chainlink can go up organically even without buyers because its reserve value is going up. And same thing when it goes down. Its reserve value goes down when Bitcoin goes down. And a massive majority of assets are paired with Bitcoin that way. So that's why Bitcoin, when it moves, that's everything else moves along with it. So if you're a trader of Chainlink, be aware that you should have a Bitcoin chart at least on the side, so you can keep an eye out of confluences that are having with Bitcoin. So if you see Bitcoin having a double top and you're thinking about entering a long on something like Chainlink, you should rethink jumping in on that long and use the confluence of Bitcoin's price action to help you with your trades on something like Chainlink. Because there's a huge control over its local price action. Okay, so Chainlink right now, we had this double bottom off $10, pretty key area. And we rode a previous value area high as a form of resistance and used it as support in confluence with using that double bottom as support. And now we're kind of got trapped in this previous value area here. And we're trading within it. We have enough volume data over here just to pull our own fixed range. We could include the back candles here. Let me zoom out a little further. And we did break this downtrending momentum here. Get rid of this. This was our last long position trade. We broke momentum, got the change of character, and gave us a decent run up to the value area, previous value area high. And now we broke momentum again. We had quite a bit of negative space with this, so you could have front run it with the double bottom. Or if there was a local SFP, you could have grabbed that too. But right now, yeah, we're riding along this local value area high and the previous value area low as a form of resistance. So if we get above the value area high by testing the value area low, driving it down to the value area high, and then get that higher high with a break of structure continuation, giving us acceptance into this value area again, then we can potentially see rotations up to potentially as high as the value area high, but we got to watch out for the local concerns here. Get rid of this orange line here. This was for a short-term long. This double bottom. We got an order block here as well. But yeah, it's same boat as Bitcoin. You can almost see the price action. It's almost a carbon copy of what's going on with Bitcoin. So if we end up getting the higher high on the value area high and get that break of structure support bounce, then you can use Bitcoin's confluence to help drive Chainlink's price up. And as Bitcoin reaches some barriers, you can watch it alongside, like Chainlink alongside those barriers. The main concern along the way up for Chainlink is around 1439. From these local highs where all this liquidity is. The liquidity right above these highs can be used as exit liquidity. So I'd mark it as local resistance in case we get a reversal off of it. We have an order block there. An order block is basically a warning that there could still be sellers with orders left over waiting to be filled. So that confluence, if you see a change of character in zones like that, it's really good confluence to prepare for a potential reversal. If Bitcoin double tops, it looks like, based on this structure, we could also double top and we'd start targeting these lows here at around 1181. So I'd watch this neckline level here, because if that breaks and we get a break of structure continuation, then we'd have ourselves a short. And my heater just turned on, so you guys might hear that. Number 37 on the like button. Remember, this is no KYC when smashing the like. Thanks, guys. 1 second. I'm going to turn off that heater because I don't think I need it. All right. All right, cool. All right, let's go. Could you check Jelly Belly? Is that Jelly? Is that an asset? Is that a thing? Your thoughts on OM and Mantra? Let's take a look at OM. Fool, bro. You got rugged. Is that legit? Let me double check something. Okay, yeah. Well, the last time we looked at it, we had this key level marked for a short. If you took it, congratulations. I wouldn't expect for it to drop this far. We have the local demand zone here. You know, like if I were to take this short, I'll be watching this value area high around $4. But it looks like dude, we lost 91% of its market cap. It does give you Luna vibes, doesn't it? Yeah, Luna crash vibes. But this seems more than that. This seems, well, no, less than that. Sorry. Like before, it was with Luna, it was an algorithm problem that kind of induced that drop. It was constantly minting tokens, right? This looks like a sell-off, like a regular rug pull sell-off. So liquidity must have been pulled, and then something must have been, tokens must have been sold. Because this is not, so I wouldn't recommend touching or trading this. Is there any news about what happened? Because there's got to be something behind. Because like and TA wise, like we knew that there was a key level here that if broken, we would drop down to at least, you know, around $4 or so. Right? We were preparing for something like that, from $6 to $4. But from $6 down, crashing all the way down to 37 cents before trying to recover, that's there's something more to it than just something behind, than just basic TA, right? Like when you have your targets dramatically exceed, and you see the like 91% of the market cap just get wiped out in a single day, there's something going on. That's gross. Let's go to, I'm going to CoinMarketCap for a second. Mantra. Go to Mantra, then go to news. All right, so the headlines right now are showing stuff like OKX CEO calls OM collapsing a big scandal as 5.5 billion wiped out. Let's see. Mantra, listen, fell more than 80% in seconds. Everyone's more at this point. So no team member or partner has sold own tokens while that decline was due to deliberate action of centralized exchanges against OM account holders. This requires a pretty big deep dive, honestly. There's not very much information about it, and the team that created OM are denying it has to do with them. They're blaming it on centralized exchanges. So if we find out where the wallet that created this big drop, we could find out why the drop occurred. Like if we see that it was a centralized exchange wallet that did like a rug pull on Mantra, because when you're an asset creator, in order for people to be able to trade your asset on a centralized exchange, you need to give them tokens, right? You have to give them a massive majority of tokens, and then you have to give them an equal value of those tokens so people can swap between like USDT and like the contract and your asset. So the risk that token creators have when giving tokens to centralized exchanges is them doing stuff like selling all your assets instead of allowing people to use it what it's meant for, which is like swapping between them. So if the team is denying it, we got to find out the wallet behind the big sell-off. And that's intense. You made bank on it yesterday? Well, that's good. Congratulations on making money on it. That's intense. It does give you Luna vibes. And to buy it at these current prices would require an insane amount of bravery. You have no idea if this could just get cut in half again and again. So just be super cautious about jumping in on this. We broke a lot of key levels along the way down. We are currently coming, like we bounced off of like this local demand zone that I would also mark right here. But after that, it gets pretty damn weak. It gets super weak. Yeah, 12 cents would be our next stop if we lose that demand zone. That's intense. So do not buy this thinking that if you bought it at this price that it has the opportunity of going back to its all-time highs again. Until you know exactly why the crash occurred, so you can see if it's a proper reaction or not to buy. You do not want to be buying into something like Luna and expect you're going to make a fortune buying it at a penny when it's been at like $100 and some or $500 before. It's not happening. It's definitely not happening. Crazy. Ondo for Whiteberry. Let's take a look at Ondo. It could be the dip that keeps on dipping. Yeah, exactly, man. So Ondo, yeah, we looked at it this morning during our trade hunting call. We are kind of also preparing for a similar situation that's going on with Bitcoin. Ondo's got a little bit of relative strength. It is in this descending channel. Oops. Let me delete some of this noise. So we dipped down into this previous range here, and we bounced off of its previous value area low, came back up, and now we're back above it. We're in like this descending channel since it was at around $2.14. And it's building like a large descending double bottom. And it's currently in this range where we could potentially see it. Like I'm more biased towards shorting right now. So if you pull a local Fibonacci from this high to this low, you'll get a golden pocket 786 zone like this. So we're basically waiting for an internal change of character occurrence within the zone to prepare for a short and target down here at this value area low, around 87 cents. We are just crab walking on most of these assets. Yeah, Poyo. And until we get clarity on these tariffs, a lot of investors are afraid of taking action on stuff. So the volume is starting to dwindle because of it. But now we have this 90-day pause where people might get, back into the groove of investing, get back onto risk on, until, again, they kind of rug us with more manipulation on the tariff news. So I'm waiting around here for a potential short on Ondo. If we instead breach past it, then I would be marking these highs for a potential SFP. If we get the break of structure where we see the value area high act as support, then I wouldn't be looking about shorts anymore is that by that point, Bitcoin's price action would have to be above its downtrending momentum and above the 50 and the 200 EMA with that kind of confluence. And that's what I'm looking at right now. What about Hbar? Let's see. We've got an Hbar chart probably. Yeah, we do. Hbar at 16 cents. Get rid of this line here. Okay. Well, we had this downtrending momentum here. We broke it. We ran up to test the value area low. Then we got a crash back down. I'm going to adjust this line now because we don't need it anymore there. Just to track the pace of the more broad downtrending momentum. I want to advance the bodies, so I'm just going to move this here. We're creating a V-shaped, like inverse head and shoulders recovery structure. We get the left shoulder posture here, the head here. We got like a double bottom into the right shoulder, and we're kind of in a moment where we can invalidate the inverse head and shoulders. So we just pull fixed here. The previous point control. We're marking the previous value area low. And the reason why I'm doing this is because like we could see that the previous POC helped generate the floor for this range bound activity we've got going on right here, right? And now that we know that, we can use this line as a tool to help guide us into knowing when we should prepare for longs or prepare for shorts. Because if we end up getting a break of structure below this point, then it's likely going to invalidate the potential right shoulder for this move, or at least it caused an extension down for the right shoulder for a more of a macro range potential here. If I zoom in on the 15-minute, we got this local resistance here. Crypto Poyo saying, your one fear is Luna was the start of the bear market. That's debatable. OM, I hope, does not that, but the ETH Foundation possible liquidation at is more of a worry to me. I hear you. I wouldn't be too concerned about something like Ohm being the influence for fear, so much fear that we create another massive crash like we saw with Luna. But for a lot of our the members of the community, we knew that the bear market technically was confirmed at 52K is when we all got out. And like just like the bull market was confirmed for us at 16.9K. The Luna crash really just gave us another leg down. It wasn't really the start. Well, it gave us one of the last two big leg downs. It was the Luna crash, and then there was the FTX collapse. I don't remember which one happened first. I think it was the Luna crash that happened first. And then the FTX leg down was the last leg down before we had a big move up. So if you were to think about it in a positive way, like if this Ohm thing is kind of a conduit for another leg down, then it would be kind of like the potential one of the last one or two leg downs. And we were just looking at the Bitcoin chart and how it's being consolidated in this massive falling wedge structure, which tells us that we could stay bearish for another 30 to 40 days. And if that happens, it'd just be the last liquidity grab before we start running to the upside. But the posture of the charts is telling us that we have the opportunity for another big drop. So I wouldn't be too fearful about something like Ohm being the conduit for a scary move like we saw with Luna. Especially since like Luna had I don't know if you remember this, but their reserve, they had a huge amount of Bitcoin. So when they got their butts kicked, they sold off their Bitcoin, and it caused a huge collapse on Bitcoin because of that. Bitcoin's in a much better position than it was then, and Ohm doesn't have barely any Bitcoin pairing liquidity. I think it probably has quite a bit of Ethereum pairing liquidity, so we got to be mindful of that. But if it was going to cause an impact over Ethereum's price, it would have already by now. But right now, locally with Hbar, sorry for kind of go off track there. What you don't want to see is, like right now, we haven't really had a proper pullback below this valley area. And then we got the pullback here, but we never got the lower low to confirm the valley area as a form of resistance. If we end up coming down, get at least a 2-candle pullback and then a lower low, then we would confirm the valley area as a resistance, and we can start seeing Hbar come back down to around 15 cents again, right, where this previous valley area low is. And it would likely be a relatively quick move because of the fact that we have basically had an imbalanced move, like a really fairly imbalanced move all the way up. We could fill those orders, like the imbalance, in really quickly. Like as quickly as we came up, we can go right back down, basically, is what I'm trying to say. And we stabilize around here. And but if we get the bullish thing would be to see these local highs act as a form of support and confirm this massive inverse head and shoulders for a potential rally back up. And the measurable base target for the momentum, if it's maintained on this move, would give us a target of 23 cents. We'll hit the watch our barriers along the way up. Around 20 cents is a big barrier, and 21.8. And then someone requested for me to look at NOT. Frembo. Question: do you hold more weight on patterns or support resistance levels? Is one patterns or levels? So patterns depends on how you define patterns. So if you're talking about like say a pennant or falling wedge or an inverse head and shoulders or double bottom, like those kind of patterns, I'm very dependent on the market structure within the patterns. The patterns are just a way to tell you the story of the likelihood of direction based on how the pattern forms the liquidity. So most falling wedges, for example, statistically have a 65% increased chance of breaking to the upside because of how they're formed, right? They're formed because we are taking liquidity from the downside and we're adding more to the up, right? We're constantly taking from the down, adding liquidity to the upside. And at the same time, investor confidence is dwindling, right? We have lots of volume here, but the volume is dwindling as we get closer and closer to an area of interest where most investors feel like this is likely going to be an area of support because it had acted as a form of support in the past. That's usually what creates falling wedges. And the reason why, like, the patterns won't be a way of saying I'm going to be jumping into a long no matter what, right? I won't be blocked out. Like it's going to have a weighted impact over my bias of what direction I'm likely going to see the price action go, but it's not going to be the main thing that makes me enter the trade. The main thing I want to see is like the change of character occurrence. If we break a high, like a strong high or a strong low, that's a big thing for me for when I want to enter a long. And having the confluence of that strong high or strong low at a value area high or a value area low and a break of downtrending momentum, that's when I will be jumping in on a long. And like here, I got a question from Trade Institution. Can you show how you're setting your fixed range volume profile to show value high, value low levels? Yeah, so let's do it with NOT, right? I haven't done TA on NOT before. Okay, it looks like I have, like way back in the day. We had a short, and we had the technical target of the short around here. And it looks like it was based on a top from up this area, and this was our target here. Anyways, let's delete all that. We don't need it. All right, anyways, so we're right now NOT's in price discovery. Let's zoom back in. So we can pull a fixed range from this point here to our current price action. To know when to pull a fixed range, a very beginner-friendly way is to see a change of character occurrence, right? Once you get your first change of character occurrence, you could technically pull a fixed range during that moment, and to have but that would be a very weak value area at that point. To make it a strong value area, you need to also have an opposing change of character, right? If you have an opposing change of character on the bottom, you have one at the bottom, one at the top, or one at the top and one at the bottom, you have a more reliable value area pull, and the value area high and the value area low will become more dependable areas of support and resistance. So it becomes mature after 2 changes of character. It's young after just 1 change of character. Right? And how my settings are, to answer your question, my inputs are set for row size 250. What that changes is the amount of candles you see here on this the data field here for the amount of volume that you have here. The default settings kind of set you up for failure because it consolidates too much of the information in a small amount of rows, so it manipulates the value area high and lows and the point of control, mainly the point of control of where it's likely going to reside. The value area volume right here, 70, is what controls your value area high and controls your value area low. So because it's set to 70, it means that 70% of the volume is between this red line here and between this green line. So 70% of all the volume based on where I pulled the fixed range is in this little zone. And that zone is basically what's usually called the reward zone or the fair value zone, where most of the volume is going to reside and where most of the price action is going to be. I have back tested this tool with multiple area volume settings, and 70 is like the default, and it's honestly the best. Like you can make it so like it's 90, or you can make it so that it's like 60 if you want, but what's going to end up happening is it's going to like 60, like the lower the number, the closer the value area high and the value area low is going to be towards the point of control, and the less accurate entries you'll have for your longs and your shorts. You should be focusing on your longs near the value area low, and you should be focusing on your shorts near the value area high when you're doing your range bound trades. If you set it to 90, yes, it'll be a lot more accurate, right? You get those tops, pinpoint tops, but the amount of opportunities you have will be pretty much cut into nothing. Like you wouldn't even be able to trade. So I recommend sticking it to 70. That I've gone through all the settings, and you guys don't need to worry about going through all that. So I hope that answers your question, trade institution. But so how I trade, these are basically my rules here, guys, so you can just write them down if you want. Like I use the value area data to define where to pair for longs or shorts. So right now with not token, I'll be more biased for longs because we're at the value area low. If we were up here, I'll be more biased for shorts. We have this momentum that's telling us the pace of the sellers. So if we watched not token on its order books, we'd likely see a sell order chasing this trend line, right? And if that sell order is massive enough to control the price to keep driving it down until eventually it's removed, right? Because who's inducing that sell pressure? It's usually a market maker, right? If we have a market maker inducing the sell pressure, in order for it to stack more and more liquidity above us, it's going to keep that sell wall there until eventually they lift it and allows them to get in on a really good entry, likely probably around something like this, right? Where all the liquidity is. If we can tell that there's a large amount of trade participants here because of the fact that we grab liquidity from this low here. We have an order block telling us there's likely residual orders here. So if we get that return back up, that sell wall might be gone. So we can use the confluence of getting above the VWAP, getting above the point of control, getting above this momentum, and preferably like a change of character occurrence, which isn't until way up here, unfortunately. But if you have a good tight break of structure level, you can use it at your stop loss and still have a really good risk to reward ratio despite the price being higher, right? Because if you're a trader, it's not about the price, it's about your risk to reward ratio, right? Your goal is to capture the path, right? It's not about getting the best price, because if you're trying to constantly go after the best price, you're going to get stopped out a million times trying to catch the knife, unless you have like a catch the knife strategy that works for you, like Fibonacci confluence with like an SFP, for example, or order blocks. As long as you have the confluence there, you can go for catching the knife. Just make sure that you back test to make sure that the probability is on your side when you do it. Can we check Solana? Yeah, we could check Solana. We got a Solana chart. I don't think I've gone over not too thoroughly. So other than that, that's the local price action. We can target these local highs, but not right now is in price discovery based on this chart. So you'll be focusing on psychological levels while it's in this massive downtrend. You can mark a macro downtrending momentum like this, right, to tell you the pace of the sellers and where to prepare for potential barriers of resistance where giant sell walls might be in the order books. But right now, the psychological levels, they're marked on your chart as these lines right here. And we got 0.0016 as our key level right now. But if we lose that, our next key level is at 0.0013. So this thing's getting its butt kicked right now. So it's not something that I would trust to hold long term until we get like that larger time frame change of character. And we need to break that local high. Like this needs to be broken. But this could be the front run opportunity, right? To that high. But if we fail at the high, you get out. If we break the high, you stay in. Solana, let's see what we're doing here. Same as Bitcoin, eh? Building a large double top. It does look like it has more bearish divergence based on its posture. We're combating a previous value area low as resistance. So breaking above this would give us acceptance into that value area that could drive the price up to its previous value area high at 145. But I would, yeah, you definitely wouldn't want to watch this point of control though. that point control has manipulated the price quite a bit. Support, support, resistance, resistance, and support. So that would be a barrier of concern along the way up if we get that break to the upside. Solana does have quite a bit of relative strength, but I don't think it has so much relative strength where it's not gonna. Wouldn't go up here unless Bitcoin decides to break its downtrending momentum as well. Like Bitcoin needs to break that in order for Solana to follow. You can pull a fixed range from our current price action and help define local trade setups. It looks like it's testing its momentum after testing the point of control here as resistance. So we maintain this momentum. We should be going up to its value area high within the next 3 hours. But if it fails from this point of control retest, then we can fall right back down to its value area low, where you can prepare for potential longs again. And this is we're at a conversion point between the downtrending momentum and the uptrending momentum. So this apex is going to make a force the decision to be made soon. So here, if we end up losing this value area low and we have it act as resistance with a break of structure continuation, which we never had here, here, or here. We did here. Just be mindful that we could confirm this as a massive double top. The measurable base move is way down here. I'll be marking this demand zone here. It's an area of interest. So if that confirms for a short with a break of structure off the value area low, and we lose this local neckline, then this is an area around 120 is where I prepare for exiting that potential short. But it would likely happen in confluence with Bitcoin coming down from this double top neckline to 81,600, sorry. And the value area high, this previous value area high, is also an area of interest for me here, around 80,000, where we could dip down, hit the hourly order block, and then get a reversal. Okay. Trade institution, been sub for a while, recommended by Alex of Crypto. Oh, nice. Never really watched. You're really good at explaining your reasons and why you do what you do. Thanks, man. Yeah, I don't want to just say it. I want to make sure you understand why I'm thinking the way I'm thinking. Oh, Freebreaker's got some messages in here. Let's see what you got, man. Ethereum point of POS. Oh, proof of stake, sorry. Ethereum proof of stake switch date was September 15th, 2022, and the chart has crumbled since. And in my opinion, or in my honest opinion, will never recover. That was the beginning of the end for Ethereum. That's debatable, man. The proof of stake system, I'm sure it was mostly induced because of the regulations were getting scary for Ethereum's locations for like mining and stuff. But proof of stake does make things a little bit more decentralized, and it does help reduce sell pressure. And I think it's like, was it Sound.money? Is it Sound.money? No. Where is it? If I go over to the community here. Oh, we have a winner to announce. I apologize. So if you see your name here, we've got, I'm sorry if I butchered your name, L'Oreal Beta. You won some free karma. So you just shoot me a message inside the Discord. Make sure it's me. My handle is in the description below. But you can get you get basically $50 worth of karma token, and you can use that to store it. If you store it, it's automatically staked in your wallet with its tokenomics basically allow you to receive free tokens. But yeah, just shoot me a message if you see your name there. Now if I go over to the server, if I type tools, maybe it's under, oh no, I guess I didn't integrate it properly. Anyways, there's this website where you can go to. I think it's like Ethereum Sound or ETH.sound or something like that. It'll show you like how deflationary Ethereum has become after its change in its protocol. Just a heads up, there's no S in my name. Trade institution. Trade intuition. Thanks, man. Just feeding, reading everything. And thanks for the $2. Oh, you can hear my kids. Yeah, you can. I'm in the studio right now, so they're probably playing on the trampoline outside. They just came back from school. Let's see. Have we gone through Teo and auction year already? We haven't gone through Teo yet. We could take a peek at Teo. Haven't looked at it since March 17th. Okay, going to the hourly. Yeah, last time we were drawing this pennant structure here. Looks like it got a little bit broken. That's why you don't want to take action on trend lines like this, right? They're good for alerts, but you don't want to take action on them when they're uptrending and downtrend like that. Now you can use, so one thing that's insanely helpful about trend lines or uptrending and downtrending is watching the order books when price action gets close to them. You can get a really good idea of whether or not that support is going to be honored or not before you even approach it. So we got these SFP levels that we've marked for potential shorts. And it didn't really look like there was any really good opportunities there. So let's mark up this value area from here to here where we confirmed it as resistance. I can remove this line. Add the new value area low. Previous high. Previous POC. There we go. We got this little local demand zone right here, right? Because we had this impulse move, built a base, then another impulse move. So we should mark that zone as a demand zone, just to warn us that there's buyers likely waiting here. And so far we're using the demand zone as a form of support at the previous value area low. So if we get a deviation of this value area low coming down into this area, it could be a good spot to prepare for a long. We've got this downtrending momentum here, right? So we could fill up some of this negative space, double bottom within the demand zone, get that change of character occurrence, and then target the previous value area high, while being very mindful, of course, of the point of control barrier along the way, where you can prepare for potential reversal structure as well. But yeah, Teo's looking good for a spot to prepare for longs. It's got a really good, decent cool down period here. And it's got acceptance into this value area. So it's likely going to behave as if we're in this value area again and go range bound for a little bit. And maybe it could help build potential massive inverse head and shoulders posture or a big return to the upside. TEA on PopCat. So I'll switch to the 15-minute chart. If you guys type exclamation point, then charts in the Discord, you will get access to, I think Teo is a part of the list. If it's not, I'll double check and make sure I get it added. But we have the chart for it. PopCat. Have we done DI PopCat before? It's a meme token, so I don't usually rush towards them. I'm on the Bybit chart right now. I like to use Bybit for most of my charts because it has like some of the best liquidity. Binance and Bitstamp have the best like history though. So if you need historical data, then Binance is a good place to go. It looks like we're preparing for the long on this structure here. That was our last little trade that we did. That was back in January. So we haven't really looked at PopCat since January. And I can kind of see why. There probably wasn't any request on it. There's a massive short call we did here. I can delete that. Don't need any more. Yeah, it seems like we broke the macro downtrending momentum. Our front run opportunity was here when this downtrending momentum here broke. We had an SFP. This was the SFP candle right here. Could use that for your long, and that would have been a really amazing entry. But right now it's dancing above the 50 EMA while trying to claim this neckline for this descending, kind of like 3 drives, descending channel. Right? We're using it as a form of support. If we grab the momentum, okay. All right, so it's basically targeting the 200 EMA. All right, so let's see. So we grabbed liquidity already from this high. We saw that a lot of it was used as exit liquidity, but we have buyers still in control. We're bouncing off the momentum, we're bouncing off the 50 EMA, and we're trying to get that break of structure continuation to the upside. We got the break of structure, but it was with a sell, like a huge sell shadow wick, which gave it an SFP, right? Right here is technically an SFP. It doesn't mean it has to go down, but when that occurs, the target is the base support level, right? Because we grabbed all the local liquidity. This candle closed back inside its range. So it's basically suggesting that the price is likely going to come down to this area. Sorry about the ambulance there. So just be mindful of that. Well, if we get the full body closure above this level here, we get this candle to close above this, it will invalidate the SFP. and it could give us a continuation to the next liquidity concern, which is actually pretty much right above our heads, like right here, right? And then our next area is here. So these are our core barriers, at least for now, until we hit the technical target of 53 cents for PopCat. So PopCat can end up going from here, another, that's 85%, that's nuts. But it's a low market cap, and it did just do 126% in the past like few days. It doesn't take very much money to move it. And it does have some relative strength. Like it's doing all of this while everything else is kind of chilling out. If Bitcoin breaks that high, it'll influence Ethereum, and then Ethereum will influence PopCat to go up. If we break this neckline, we confirm a double top. We get the confluence of losing the EMA, and you can start targeting the demand zone here at 1775. Do you have a moment to look at CAS? Yeah, we can look at CAS. I think we have a chart for it. CAS was a really good trend trader's asset if you're a trend trader. Because when it picks a direction, it tends to go that direction for a long period of time. So you can see, like, for example, this range is pretty big. Like this range is, from the Valerie high to Valerie low is 46%. That's just from the Valerie high to Valerie low. That's not like it's extreme lows to extreme highs within this range. So if you use my rules, you guys, like I tell them to you all the time, and you use them within ranges like this, you can make stupid amounts of money. Just a matter of making sure that you have a safe stop loss. And just use the strong lows as your stop loss guard. And the risk to reward ratios, you're usually 3 to 4xing your risk on these swings. But right now, Caspa is trying to battle this previous demand zone that held up that range, right? We got this downtrending momentum that broke. It is close to, and right now it's combating the neckline of this double bottom posture right here. We're seeing clear signs of accumulation. We swept the low, which is bullish. It's always bullish in my opinion of sweeping the lows before going up, because we're grabbing all that liquidity, giving less reasoning for a market maker to want to go back to those lows again. So most of the weighted liquidity, just by looking at this chart without looking at the heat map, we can kind of give an idea that most of the weighted liquidity is above us and not below us anymore. So your bias longer term can be bullish for this. We just got to break above this neckline here so we can get acceptance back inside this demand zone and at least try to retest the previous value area low again at around 11 cents. If we fail to get there, then any higher than this, if we get a double top or any kind of change of character currents like we had here, then you just listen to the market and leave, right? And then just try to find an entry for that next retest again. Because every time we retest an area like that, it gets weaker and weaker and weaker as a form of resistance. This is a value area low, so there's going to be lots of people's averages here. Right? We were ranging here for 460 days. So lots of people who are accumulating, their averages are going to be roughly around that point of control. So when we get close to that area, I can almost guarantee you that we're not going to get acceptance in there the first time we test it. All those people are going to, with weak hands that are finally at break even again, are going to sell. So when we come back up and we test it, you can expect that there's going to be a lot less concerns. And that's why inverse head and shoulders usually take as much time as they do to break to the upside. They're getting rid of the weak hands. And we're getting that kind of posture right now. Right? So I'm waiting for, that's what I'll be waiting for with Caspa, is to see that neckline act as a form of support. Right now we're combating as resistance. And then you can use the break a structure low as your stop loss guard. Whether it be above or below the neckline, doesn't matter. And your measurable base target, they're easy to find. You just go from the neckline to the support, click and drag, and that defines the momentum, the pace of the volume. If it were to continue from the break, it gives you that measurable base target. And it's targeting the point of control area. So we'll see if we end up getting up there or not. But then once you have your direction, your target, you just look at the barriers along the way. What are areas of concern along the way? Is it this wick here where liquidity is resting at the top of this demand zone? The value area low, where all this liquidity is resting, and the point of control, where most of the people's averages are. Hey Kyle, I missed your live sessions. Yeah, sorry about last week. But I'm thinking Caspa's looking really bullish, in my opinion. We just gotta wait for the confirmation. The last trade opportunity, in my opinion, like the best one, would have been this liquidity sweep. If we zoom in on the hourly, we can pull a fixed range. Oops, wrong one. Yeah, it looks like there's a short opportunity potentially coming soon, but the R&R isn't really there. Because like what we're seeing here is the posture. We had a relatively big, fast move to this local value area high. We grabbed liquidity from this wick, just barely getting a higher high. And this neckline, if broken, could induce a move back down to the value area low. And even though we know that's likely going to occur, doesn't mean we should take the trade, because the risk to reward ratio just isn't there. Unless we get like a slow bounce here that we could potentially use as our stop loss guard after the break of structure. There's no R&R that I expect from that short. Okay. SIA, if possible. Still good for a spot buy. Let's take a look at SIA. See what we have. I don't know if we have a SIA chart. No. Yeah, so it's been in a downtrend for a while now. We haven't looked at it in a while, but looks like we came back down to this demand zone from way back in November 2023. We bounced off of it, and now we're starting to break the downtrending momentum. And right now we are either building a reversal structure, just like Bitcoin, right through this double top against it, kind of like what we had right here, right? Double top, and double top. So every time we retest this momentum, we build a double top and we prepare for a reversal. We just need to have the confirmation first. So we have the neckline right here. We have a fairly imbalanced move to the upside, right? So we can see this candle and how it was formed.
I could teach you guys as to how these candles are formed the way they are, but it's like a 30-minute lesson. But it's basically a form of imbalance in the market, and the order books have been cleared up. So when we come back down and break this potential neckline here, our move downwards is going to be almost as quickly as it was on the way up, right? So we're going to come down likely at the same pace we came up, and we'll likely slow down at the local neckline here where we had resistance. So if this double top confirms, I'll be targeting this local support right here, 1569. It's the 4 hour. We can zoom in a little further. Yeah, hourly levels a little more concrete. We got the higher high right here. We grabbed that liquidity. The candle closed back inside the range. So this is an SFP candle, right? And that gives us a target of local support right here. So this candle has told us that we are statistically more likely to come down to at least this neckline. So from there, you could have entered a short, and your stop loss would be here. If you're late to the short, then this is the next area where you want to make sure we're confirming the continuation. So if we break and get another break of structure below the neckline, you can use that location as your stop loss. If you're in on the short already, you'd rotate your stop loss from here to the next strong high. So right now, this is not the strong high yet, but it will become the strong high when this breaks. So we just need to break this location first, and then this will become the strong high. And then we can use every newly formed break of structure as our strong high after that. So that's what I'll be waiting for. And I'll be targeting, probably around here for a short, if you're not already in. Okay. But after that, we're getting squeezed. We have about 7 days, maybe a little more. The apex point against the demand zone, about 14 days or so, which is sooner than Bitcoin's squeeze event. Like Bitcoin's squeeze event is in like 30 days to 40 days. If you look at the daily, we zoom in. So that could give us an edge in knowing something, that if we have an apex point that's half the duration of Bitcoin's, then that could tell us that we might be breaking out sooner if we start seeing that confluence along multiple charts. That's assuming we break to the downside here. But if we do, then we just know that we're likely going to be stuck down here for another month. Okay, guys. Well, I've got to go. I had a lot of fun. Great questions today, by the way. Like, honestly, I don't want you guys thinking that you're burdening me or anything like that by asking me questions about trading or anything like that, because it helps you guys. And I'm sure a lot of other people who are watching this want to ask the same kind of questions. So you don't hesitate to ask questions. Like, I enjoy it. And if there's no trades going on, if we have nothing that we can actually take actual steps on together, either like if price action was down here, then maybe we could jump in a short during the live together. But until stuff like that happens, I can answer any questions you guys ask. Like, I love answering questions. But I gotta head out. Great show. Very impressed with your thought process. Thanks, man. I want to be doing more live soon. I'm getting really excited for that kind of stuff. And that way we can reach out to more people. Thanks for all the likes and subscriptions, everyone who's subscribed. We do a live every day. I want to bring it from 1 day a week to 3 days a week, and help as many people as I can through YouTube. So it won't be an everyday thing, because I have a lot of responsibilities with the community, because I do calls often with them, like trade hunting calls and mindset calls and stuff like that. So I can't do one every day, but I will try my best to do one at least. I'll try to do one like every other day, like 3 days a week kind of thing. But yeah, thanks a lot for watching, guys. Thanks for subscribing. Thanks for liking the video. You guys have yourselves an amazing day, and thanks for jumping on.